Okay, good morning and welcome to today's webinar. I'm just going to give everyone a couple of seconds to join the webinar. Hopefully everyone is having a great Thursday. I'm in Massachusetts and it's a rainy day here, but we haven't had rain for a long time, so I don't mind. Okay, I think everyone has joined. So my name is Camille Blomdahl, and I'm the Director of Client Services at WealthTrace. I will be taking you through the WealthTrace Planner today. If you have any questions as we go along, please send them through the chat, and I will do my best to answer them after each section. I may hold off on answering some of the questions until the end of the webinar, or I may need to follow up with you via email. And to ask a question, please click on the Q&A button, which you'll find at the bottom of your Zoom window. And we are going to be starting off on the home screen. On this screen, you can get a brief overview of your plan and see how your retirement plan is shaping up. This page will show you how things are looking if the returns are similar to what they have historically been. So the home screen is a static look into the plan projections, and it assumes the rate of return on all the investments are the same every year unless there's a future asset reallocation. You can see the projected investment values over here on the right-hand side at John's retirement and at Heather's retirement. And I want to point out that this is not the projected value for each of them at their retirement dates, but rather the total investment value at each of their retirement dates. That makes sense. These projected balances are shown in today's dollars. And what we mean by today's dollars, also known as inflation-adjusted dollars, is that we have stripped out inflation to make the numbers easier to understand. We often use today's dollars in financial planning, as the projected balances can otherwise appear much larger than what they will actually be worth in, say, 20 or 30 years. You can also see the projected investment balance at the end of their plan here and the projected net worth at the end of their plan. You can see the current asset allocation down here, and which is a great way to quickly view how you were invested across all of your accounts. And you can see any future asset reallocations that have been added here, which we'll talk more about when we head over to the plan settings and assumptions. And in these graphs over here, you can view things like how expenses are paid for in or before retirement, investment balances, how funds are spent, income versus expenses, and net worth. If you hover over these bars, like I'm doing, you can view the breakdown of each bar and see more data. You can also click on the legend down here below the graph, and you can filter out the data and pick and choose what you'd like to view. Over here on the left-hand side, you can see all of the investment accounts that are in this plan and the balances. The accounts that show a date below the balance are the accounts that are linked through Yodlee. And this date will indicate the last time that the account was successfully updated. We will talk more about Yodlee and linking accounts a little bit later in the webinar. So a great feature on the homepage is that you can play around with these sliders to see how your results change. For example, you can change your retirement age and living expenses, your contribution amounts to your investments, your rate of return for your various investments, and you can also change the amount spent on additional goals or goals and additional expenses. If you move these sliders, the results shown below will change in real time, so you'll quickly be able to view how changing those will affect your plan. You'll see these sliders on multiple of the other screens as we go along as well. And I can show you, so for example, if we spend way more on the new condo, you'll see what happens immediately to the result. And you can easily reset that as well. Does anyone have any questions before we move on this page specifically? Okay. Let's move on to the plan inputs and assumptions. If you do have any questions, feel free to send them in whenever you're ready. I can answer them later as well. So Now that we're in the plan inputs and assumptions, this is where you will be building the foundation of your plan. On the personal information page, you can input all of the basic information about yourself and your spouse or partner if you're adding one. You can input your date of birth, if you're already retired, or your retirement dates, your current salary, and how long you expect to live. In the plan settings, assumptions, and taxes, I will not go through every single setting, but I will point out a few important ones. So you can edit your inflation and COLA rate here. So you can choose to either use a static rate for the entirety of the plan, or you can choose to vary inflation and COLA rates by year as shown here. You can click on these numbers to edit them, and you can easily add or delete a row. This is an important feature to have in a retirement planning, and it will add to the accuracy of your plan projections, especially in times of volatile inflation. So I see Dean is asking about what about modeling different ages to take Social Security for the sliders. So you will be able to do that in the scenario section instead. Once we head over there, I can show you where to do that. So you can input your annual living expenses here, and I want to point out that you should enter what you think your living expenses will be when you are retired. So for example, if you have children and you are paying for their expenses currently, you will want to remove those expenses from your annual expenses if they will no longer be living with you when you are retired. These expenses will automatically be adjusted for inflation within the software, so you will not need to update these every time you log in unless you have significant changes. You will, however, want to update your annual expenses at least once a year, along with your Social Security and any pensions as well. Jack is asking if a mortgage is included in annual living expenses or if it should be included, and no. Typically, we recommend that you separate that out and add that into your additional expenses section instead. I'll show you where to do that once we move on to that section as well. Marion is asking what parameters are impacted by inflation and COLA assumptions. So the COLA is going to affect your Social Security. Inflation is going to affect all of your expenses. So back to living expenses. So your annual living expenses should include the typical monthly expenses that you have, such as household bills, groceries, gas, utility bills, things like that. Larger expenses, such as a mortgage payment, like I just mentioned, car payments, annual vacations, should be added in the goals and additional expenses section, which I will show you later. You should also leave out any income or investment taxes, since the software will deduct those for you. I also want to point out that these expenses will only matter when you are marked as retired in the software. If you are still working and earning a salary, then the software will assume that you are paying for all of your expenses using your salary. And we have a built-in budget worksheet, which can help you calculate your annual living expenses. You can add up to 3 separate budgets in here, and you can easily toggle between these 3 by clicking down here. To see how that would affect your plan. You can click on any of these rows to edit the expense description and the amount, and you can easily add a row or delete a row. You can also choose to use our varying living expenses option. This is for those who may be spending a certain amount on annual living expenses in retirement at first and will be spending either much less or much more in the future. These amounts will also automatically be adjusted for inflation. But like I mentioned before, you do want to update this too, at least annually, just so you have an idea of the correct amounts. Lewis is asking if we have a Monte Carlo feature. Yes, we do. So we'll head over to Monte Carlo a little bit later, where I'll explain how that works versus the home screen where it's a static projection. The Monte Carlo will give you a varied return on all of your investments. So we'll talk about that a little bit later. But yes, we do have a Monte Carlo. So let's move down to the advanced settings. You can select to reduce living expenses by a percentage here when one partner passes away. You can select to have the software assume that you are rebalancing your investments annually if you click this. If this is set to yes, the balances of accounts in each investment section will be rebalanced back to the share that existed at the beginning of the first year. So for example, let's say you have two investment accounts in the qualified tax deferred section. The first has a starting balance of 500,000 and the second has a starting balance of 400,000. The first account has a beginning percentage of 56% and the second account is 44%. Regardless of the growth of these accounts or withdrawals from them, they will be rebalanced at the end of the year such that the first account is once again 56% of the total and the second is 44% of the total. I do want to mention that this does not include Roth IRAs, 529 plans, and HSA accounts. And the idea behind this setting is that most people will rebalance to maintain their current allocation each year. And this is a way for the software to handle this for financial projections in every year. And down here, you can add up to 2 future asset reallocations. You can create your own model portfolio to reallocate to or choose from one of ours. We have many model portfolios for you to choose from, and I will show you where these are located towards the end. A lot of people will reallocate their portfolios as they age. Most people will move towards a more conservative asset allocation as they approach retirement to minimize the amount of risk that they are exposed to. Oops, excuse me. I also want to point out that WealthTrace can calculate your Medicare premiums for you and add those into the plan. And this can be toggled on right here. This is often an expense that is overlooked in retirement planning. And since the premiums will change depending on your income, it's important to include this. So let's pop over to the taxes section. So you can have WealthTrace estimate your federal income tax for you based on the information entered, or you can manually enter your own federal income tax rate here. You can enter your state of residence, oops, down here. So let's say we'll pick Idaho for now. Or you can I'm sorry, you can enter your state of residence here, and you can indicate whether or not this will change at retirement or a future date by clicking on this. This is a very helpful feature for those that may be relocating to a state with a higher or lower state tax rate at some point in the future. WealthTrace will also accurately project the state tax rate for those living in a state with a progressive rate. You can add a capital loss carryover down here, which will be applied against any capital gains on taxable investment assets. And if you're not familiar with capital loss carryover, it means that when you've sold investments at a loss, you can use the capital loss tax deduction over multiple years to offset future capital gains. So if you have $50,000 in capital losses, you can offset $50,000 of capital gains, meaning you will not owe any capital gains taxes on those $50,000. Lou is asking if the Medicare costs calculate IRMA. Yes, we do calculate IRMA, and that is what your premium will be based on. Greg is asking, will there be a way to model AMT tax credits in the future? Can you elaborate a little bit on that in your comment? And I'll see if I can answer it. I will do my best. Okay, so let's move on to the investment assets section in the meantime. This way where you will see any linked or manually added investment accounts. You can change the account name, assign an account owner, see the balances right here, edit any underlying holdings, add contributions, and see the annual return. If you click on this little magnifying glass over here, you can see your holdings and the balances. If you click on the pencil icon, you will be able to edit all of the account information. Under the account holdings and assumptions tab, you can change the account type, the cost basis, tell the software when the funds can be used and whether you want to exclude the funds or this account from a future asset reallocation. And if we go ahead and click on one of the accounts that isn't linked through Yodlee, you will also see the option to edit the or enter the underlying holding. So if we click yes on that, in here you can add the tickers for the holdings that are in the account, which will give a more accurate projection, and the balances will update daily. And if you don't want to do that, you can also assign the entire account an asset class. So accounts linked through Yodlee will show up in here with a green check mark, which indicates that they have been updated upon logging in. And I want to give you some additional information on why linking accounts through Yodlee is extremely valuable when creating your financial plan. When investment accounts are linked through Yodlee, the investment assets are updated daily, and we are able to retrieve every underlying holding, such as stocks, bonds, mutual funds, ETFs, and more. We are also able to retrieve the asset class that the holding is assigned to. And this allows us to map the holding to the correct asset class within WealthTrace. It also allows us to pull in the historical information for that holding, which is extremely valuable and adds to the accuracy of the projections. We have 3 sections that accounts will be placed into. You have the taxable and tax advantage section, the where you can add, sorry, let me go back. So in here you can add, oh, there we go. In here you can add your brokerage accounts, Roth IRAs, HSAs, 529 plans. In the qualified tax deferred section, you can add regular IRAs, 401ks, inherited IRAs, SEP IRAs, and more. And finally, in the non-qualified tax deferred section, you can add deferred compensation accounts and annuities. You can also drag and drop accounts within these sections, which will change the order in which the accounts are being used in the software. So by moving these around, you can see how this affects your overall plan projections and the tax calculations, which is important if you have an account with high capital gains. You will want to drag accounts with high capital gains to the bottom so that they're used as late as possible in the plan. Oops, sorry about that. So for example, we can drag that one down there. Maybe we want the Roth last, for example. Howard is asking, do I need to update the capital loss figure manually? Yes, anytime you have used your capital loss, you'll want to pop in and update that. Jack is asking a question about the order, what I just said about how dragging and dropping accounts will affect what accounts are being used in the plan. So unless you turn this setting off, if we pop back over to this setting over here, so this is the default. So anytime that an account is being used in the software, it will take them in order. So if you have an account first and it's taking from your taxable accounts, it will start with the first account, then to the next, and then it'll keep going. If you choose pro rata, it will take an equal share from every single account in that section. So if you're using these accounts first, it will start with the A savings account, then B, and then it'll keep assuming that you're going to empty those accounts out in that order. Joe is asking how secure is linking through Yodlee. We don't have multiple or MFA right now. So we don't store any of the information on our end. So we don't store any of your account usernames, anything like that. That is all done through Yodlee. When you use Yodlee, you link your account with your login credentials and all of that through them. We don't store anything on our end. I can send or provide you guys with the information of Yodlee security, but they are trusted by huge brokerages around the country. Pretty much everyone uses them, but I can give you information on their security protocols towards the end. Greg, I will take a look at your questions a little bit more towards the end about the tax credits. I'll have to look at that, but I don't believe that is something we're able to do right now. Okay, so let's head over to the Social Security quickly, and then I'll pop back over to look at some of your questions. So you can add your Social Security payments in here, or you can have the software estimate it for you. You can also input if the payments are going to change in the future at any point. This is applicable to those who may be taking their own Social Security payment to start, but will later be taking half of their spouse's Social Security payments when they start taking theirs. You can also add one or more pensions down here, along with the age of first payment, whether or not there is a growth rate, and if there is a survival benefit. Same for person number 2, so I won't run through that with you. Let me see. Let me go through a couple of these sections and then we can go back over some of your questions. So moving on to additional cash inflows. In this section, you can enter any type of additional income or additional cash inflows that you may have outside of your normal salary, or any type of income that you will have in retirement. You can enter items such as a future inheritance, annuity income payments, and proceeds from a home sale or business sale. You can add when and how often the cash inflow will occur, and you can assign the income its own tax rate by either choosing one of our tax rates or entering your own. And just like your annual expenses, you should make any necessary updates here at least once per year. And in the goals and additional expenses section, you can add any type of expenses that you wouldn't want included in your normal annual expenses. So you can enter things such as purchasing a new car every 10 years, an annual vacation, your mortgage, additional healthcare costs, and more. You can easily make changes to these you can easily make changes to these expenses without having to edit your annual living expenses. And you can add when and how often the expense will occur. You can also tie an expense to a specific account. So we'll take a look at Allie's college tuition, for example. We click on this. If you say yes here, that this will be funded by a single investment first, you can tell the software that you will be using, for example, her 529 plan to pay for her college expenses. And here you can add any assets that you own that you'd like to be included in your net worth. These will not automatically be used to fund any goals unless also added in the additional cash inflow section. Their value will just be added to your net worth. As shown here, you can add things such as expensive equipment, collectibles, obviously your property. And then in the liabilities section, you can add any mortgage or loans that you have. If you add a mortgage in this section, the software can calculate your annual mortgage payment and automatically add it to the goals and additional expenses section for you. So for example, I entered the loan information for this mortgage, and the software went ahead and added it for me right here with the annual payment. Let me take a look at some of your questions before we move on. So Joe is asking, why is the mortgage under the additional expenses section and not in the regular budget? The main reason for this is that typically your mortgage is fixed, so it's not moving with inflation. Your expenses are being adjusted and increasing annually with inflation. So by putting it in here, you can assign it a 0% growth rate so that that remains steady throughout the plan. And also you have an end date. Unlike the expenses, it's going to assume that you're keeping those annual expenses till the end of your plan. Howard is asking, is there a way to fine tune withdrawal strategies specifically with respect to maximizing tax brackets? I would say that with this type of question, you may want to look into booking an expert support session with Doug, who's the founder of WealthTrace and a certified financial analyst or chartered financial analyst. My apologies. He would be able to help you figure out the best withdrawal strategy. There isn't necessarily one to implement in the software unless you kind of play around with it and see what works. But I would recommend setting up a session with him to figure out your best strategy for you. let's head over. I'm going to hold off on some of the other questions for now, and I'll pop back into those shortly. So we're going to head over to the Monte Carlo section or screen. Okay. So now that we have reviewed all of the plan inputs and assumptions, let's take a look at Monte Carlo. So Monte Carlo in WealthTrace tells you the probability that you will never run out of money in retirement. So we run 1,000 scenarios where the rates of return on all of your investments change in every year. We drill down into every holding that you own and look at the history of the asset class to see what its average rate of return, volatility, and correlation with your other assets has been. We offer the most accurate Monte Carlo result that you can get because we're actually looking at every single holding that you own. WealthTrace is then able to generate a distribution of investment returns, which allows the program to generate a series of varying investment returns every year. When the Monte Carlo simulations are run, the program counts how many times in these simulations that you run out of money. So what is shown here is the percent of time that you never run out of money. So the best you can get, therefore, is 100%. And then down here, you can view the worst quartile, the median, and the best quartile. The number shown here is the average of the simulations run in that quartile. In this graph here, you can see the 1,000 trials that were run, and this blue line here is the median ending investment value in each year. And the sliders that we looked at in the beginning are also on this screen. So if you move any of these around, you can immediately see how that affects your Monte Carlo result. Jerry's asking, what is the source of the projected investment balance on the home screen? It doesn't match any of the Monte Carlo numbers. So in the beginning, I mentioned that the home screen is a static view into your plan projections. So it's assuming that every return or all of your returns are going to remain the same in every year. So there's no volatility at all. Therefore, the home screen can obviously look a lot better than Monte Carlo since this is varying returns. So that is why those two do not match up. Joe is asking, so the randomness is based on asset class and not by the individual security fund ETF. Correct. Everything is based on the asset classes. Okay, so let's head over to the cash flow projections. So in here, you can review your cash flow year by year. You can see all of your income broken down in sections. So you can see the pension income here, Social Security. If you scroll down a little bit, any cash, oops, too far. Any cash inflows, they're occurring much later, but any cash inflows in retirement here. Their total income, investment growth, and cash inflows are here. And then you can see any of their additional expenses, their living expenses. And if we scroll down a little bit more, you can see those Medicare premiums being calculated here. And you can see whether or not there is a surplus or deficit in their portfolio year by year. And then if we keep going, you can see their marginal and effective federal income tax rate calculated here, along with that state tax rate. And if they have any required minimum distributions, those are calculated here as well. I also want to point out before we head out from this section, we will show the total required minimum distributions here. So if you have multiple IRAs, you will see the combined RMD amount. Sometimes that gets confusing, so just want to make that clear before we leave this page. And you can click on these headers up here to dig into the data in more detail. You can, for example, view each account year by year to see the balances, projected growth, and here, average rates of return, expenses paid by each account, and more. And you can export this data to Excel, PDF, and CSV by clicking over here. If you click on this little cloud button, it'll ask you if you'd like to download the data. And the sliders that we saw on these other two screens are here as well. So if you move these around, you can see what happens to your data down here immediately. Carla's asking if Medicare premiums can be calculated by WealthTrace. Should they be excluded in estimated annual expenses? Yes, if you opt in to have us calculate your Medicare premiums, you can take those out of your annual expenses. We do, however, recommend adding a line item in the goals and additional expenses for any additional healthcare costs. Because typically Medicare, the basic Medicare isn't going to cover everything. So we recommend that you add another line item for any additional expenses for medical expenses outside of that. Someone is asking if this recording will be available later. Yes, we will send out a recording of this webinar once we are completed. Lewis is asking, what is a good target Monte Carlo success rate? This is really hard to answer. We typically say that booking an expert support session, also to go through your Monte Carlo results, is a great way to figure out what is a good rate for you. I don't think necessarily, like you said, if it's too high, maybe it means you're living below your means, or you want to give to heirs, or too low means cat food for dinner. It could. So I would recommend looking into an expert support session if you want to go through your Monte Carlo result. It's so individual. And obviously, the more volatile your portfolio is, or the more aggressive your portfolio asset allocation is, the more volatile your Monte Carlo results will be. Carla's asking, what is the cost of the expert session? I can show you guys the link of where to find the booking page for that towards the end as well. I don't know the cost right off the top of my head, but you can choose either 30 minutes, an hour, hour and a half, so you can customize it. Howard is asking, is there a way to determine a safe annual spending amount or rate? Not necessarily in a straightforward way. I would say playing around with the home screen or the Monte Carlo with your annual expenses to see how much you can spend without those results getting too bad would be a way to do it. But it just depends. It's so individual that no, there isn't really a way to determine that per se. Okay, let's head over to a couple other screens and then I'll go back to your questions. So let's go over to the investment history and breakdown screen. So in here, you can view the historical data on all of your investment accounts and also look at the holdings that are in each account. So you can see the allocation by individual account, for example, here, or you can combine any accounts together to see the allocation for those. You can also select an account type. So if we want to look at just our retirement accounts and see what our asset allocation is for those, you can click on that. Give that a second to load. So this is the asset allocation across all of the retirement plan or retirement accounts in this plan. And if you scroll down, you can see the current balance, year-to-date return, and percent of account for those down here. You can also see the historical performance for the investments that you own, and you can even compare funds that you own to other funds to see if there are other options out there that are performing better than yours. So, for example, let's say we compare this to this. It'll show you here how that would look instead of yours. You can also look at the fund fees and turnover for the investments that you own, and which shows you how much you are paying for your funds. And then I can also show you the transactions tab. So in here, you can view any transactions that are made on your accounts. This only works for linked accounts through Yodlee. So I just want to point that out. Lou is asking if Yodlee can import credit card expenses. I don't believe so, but sometimes yes, which may sound like a strange answer, but it really depends on per institution. I don't think we have the ability to import any credit card debt or any credit card information at the moment. I can look into that for you though. So in the scenario section, you can see that these are our preset what if scenarios. So you can explore things like how retiring earlier or later affects your plan, changes in your living expenses, um, inflation, delaying or reducing your Social Security payments. I think we mentioned a little bit before, someone asked about, I think, delaying Social Security. So that is one thing that you can do in here. And you can also, let's head over to user defined. So in the user defined scenarios, you can combine multiple changes at the same time. So for example, you can run a scenario where you have increased investment returns and inflation to see how both of those combined affects your plan. You can run a bear market scenario and choose a recession to see how that would impact your retirement plan, or you can create your own hypothetical recession. We also have a Roth IRA conversion tool, which is very popular, and you can select which IRA you would like to convert right here. When you want to start the conversion, for how long, and which federal tax bracket you would like to stay under. We will be hosting a webinar on Roth conversions next week. So if any of you are interested in that and you haven't gotten the link, let me know and I can send it to you. But make sure to register for that one if you want more guidance on how to use the Roth conversion scenario tool and how to implement the conversion in your plan. We'll also be providing a ton of just information in general about Roth conversions and who might be a good candidate. So I would definitely recommend to sign up for that if you are interested. You can also run reports in the software on your plan. A lot of people like running their plan reports or report monthly or quarterly to have a record of any changes that they have made. You can add notes to your reports here, and you can export it in multiple formats such as PDF and Excel. I'm going to pull up a sample report for you guys so that you can see what it looks like. So this is what the sample report looks like. I won't go through the entire thing because it is lengthy. But this is just a different way to view your entire plan, and it's a good thing to download and keep just to see how it changes. But you can go through a ton of information in here. I like these pages. I think seeing the cash flow in a PDF format can be really helpful versus trying to go back and forth in the software. So you have the option to download this and take a look at your report instead of looking in the software. So tons of information. Let's head back to the software. So before we wrap things up and I head into your questions, let's go to some of the plan settings or the account level settings. So over here, you can create your own model portfolios or make changes to the ones that we have created. You can click on the names here and change those and the percentages as well. You can also easily add a strategy or delete one by clicking on this little button here. You can add or make changes to the existing asset classes in here. You can add your own asset classes as well for things like valuable art, gold, real estate, collectibles. These are the default rates of return, and you can change these if you like yourself as well, but we will also update these periodically. So let me look at some of your questions again. Brian is asking, will the Roth conversion area allow in the future to include multiple held accounts for conversion versus just one account at a time, or by manually grouping the sum of accounts? Yes, this is on our agenda. So we will be releasing a revamped user interface towards the end of this year, potentially beginning of next year. And this is one of the features that we plan on adding. We also plan on adding the ability to auto implement your Roth conversion. So if you like the results and you want to move ahead with it, you'll be able to implement it without having to go back to the investment assets section and input the data there. But yes, we plan to be able to have the ability to run multiple scenarios together without having to manually combine the accounts. So Dean is saying that he's been struggling with the Roth conversion tool because he has multiple accounts that he wants to run. So like I just mentioned, you can temporarily combine the accounts, which is a workaround for the moment. By doing that, you can just zero out one account and add the remaining dollars from the other account to your one account, if that makes sense. So zero out one account, move all the funds to the other one. That way you can run a scenario on multiple ones, but hopefully we'll have the feature to have multiple Roth conversions running at the same time or multiple IRAs chosen as soon as possible when we have the new user interface. An anonymous attendee asked, in a widower scenario, I'll be taking my late spouse's Social Security at age 60 and mine at age 70, which will end my spouse's benefits. So you would be able to use the Social Security entry where you change it in the future. So let me actually head back over there and I can show you. I would just leave out the second person Social Security and just put it in for yourself. So let's head back over here quickly. Another thing I should mention with the new user interface is that the software will be much faster and even easier to use, which is very exciting. So for the Social Security, if it will be changing at some point in the future, you can choose this input right here, and then you can let the software know what you're receiving in the beginning and then what you will be receiving in the future. So for example, if it's changing at age 70, you can input that change here. Brian asked if there is a time frame for the new user interface. Yes. End of this year, potentially beginning of next year. We will also be requesting beta testers. So there will be an email going out at some point asking if you'd like to beta test the new software or the new user interface. So look out for that as well. But just be patient with us. We're working on it. We're getting close. So we're very excited. Howard is asking if an app will be available at some point. Not as of right now. I won't say never, but that is not something that we are actively working on. So before we wrap things up, there are a couple questions left that I'd like to follow up via email, just because they are a little bit more complicated for me to answer right off the cuff. So I will get back to those that I have not answered via email. And I do want to mention our various options for customer support as well. If you guys haven't noticed already, we have a live chat, which you can open by clicking on this little window down here. If there are no live agents, you can leave us a message and we will get back to you as soon as possible. We also have an extensive knowledge base, which I can open up for you now. You will find, so if you search anything in here, you'll find answers to our most frequently asked questions. You can type any question that you have in the search bar, and any related articles to that question will pop up. We will also be putting together financial planning courses for active subscribers soon. So for example, we will discuss things like how to determine the best order of withdrawals, like we were talking a little bit about before, Roth conversions, what are they? When do they make sense? Which we'll also be discussing next week, how to interpret your Monte Carlo results, and much more. And we also offer expert support sessions, which I think I've mentioned multiple times now, with Doug, who is the founder of WealthTrace and a chartered financial analyst. He can audit your plan for you and review all of your inputs with you. So if we head to the website, if you scroll down all the way, you will see expert planning help. So if you head over to the website, you can look at this here. Here you can see the current rates and schedule the expert support session as well. And you can also see any reviews from customers who have had an expert support session. And if you have any questions for us, feel free to email. If I haven't answered them already, if you click on this contact, you can shoot us an email right here. And we will be happy to answer any questions that you have. Let me look at the questions one last time. Jerry's asking, how do you specify the use of assets within an account? For example, I would like to use cash/money market funds before stocks funds. So our withdrawal method is FIFO at the moment. I can follow up to see if there's a way to do what you're trying to do. If you wanted to specifically ask or use cash money funds first, you could separate those out into a different separate account if you wanted to. Tom wants more information on Yodlee. So let's go back to the knowledge base actually. And we'll type in Yodlee. Oops. Okay. So this is where you'll find the information that I was talking about. So if you click on this button right here, you can see all of their security information here. But they comply with banking standards, so it's a very robust software. Otherwise, we would not be comfortable using it either. Rick is asking, could WealthTrace put your current portfolio annual return on the dashboard? So I'm assuming you're talking about the home screen, and it is there across different accounts. So let me show you a way that you can look at it if this is what you mean. So you can see them here if that is helpful. Just looking at some of your questions still. Sorry if I'm quiet. So Joe is asking if we can designate which account RMDs are deposited into. So unless they're not needed for expenses, the software will use any RMDs before having to take from your accounts for obvious reasons. So if they're not needed for any expenses, then it will assume that you are distributing those into, or the funds into your taxable accounts on a pro rata basis. And there's actually a way to see if those are being used, and I can show you where to do that right now. So if we head over to cash flow, investments and cash inflows, and we go to investments, let's see here. So if you take a look at these tabs, you can see the RMDs. So the software is using their RMDs to pay for expenses. If it wasn't, it would show right here that it's depositing those. So in 1 year, it takes $172 and puts it into the taxable accounts. Howard is asking, what does 0 years to a bear market mean? It means that you're running into a bear market now versus next year, for example. So if you want to model a bear market now, you can do that. But if you want to have it hit your account next year, in 2 years, and 3 years, for example, you can choose that. Rick is asking, is that the actual rate of return you are getting on your investments? And he's referring to these home screens. So this is the average average rate of return in each of the sections. So this is the average rate of return for all your taxable and tax advantage accounts. So it will be based on your asset class that is assigned. So it's not the actual return that you would see for your specific holding, but rather the return on that asset class. Thank you for all the nice feedback. I appreciate it. It's always a little tricky to look at the questions and run through the webinar at the same time. So I appreciate everyone's patience. Rick is asking, where do I find the actual rate of return for my portfolio? You'll want to look in the investment history and breakdown, and you can look at the rate of return here. So this is your actual rate of return for any holdings in the accounts. Thank you, Brian. And I also saw your question about the revised user interface, if we will be including common withdrawal approaches. I mean, we kind of use a common withdrawal approach right now, assuming that you're using your taxable before your tax deferred. But no, we don't. I don't think we have any plans to implement any type of kind of 4% withdrawal rule type of thing. I'm not sure we think that that is necessarily the best option for everyone. So not that I'm aware of. No. Rick, yes, I can help you offline. I will follow up with you after the webinar. And I can take a look at your plan. So I think that is it. The ones that I haven't answered, I will follow up with you via email. And if anyone has any other questions that you can think of after, after we're done here, feel free to shoot us an email via the support, or you can just send it via the chat as well. Oh, Joe is asking, will the individual fund historical information be available without linking accounts, but entering the ticker symbol and number of shares? Yes. Thank you, Dean. I'm glad you find it helpful. There's lots of more information coming down the pipeline. We also have an online tutorial, which I should mention, which is relatively new, and you can find that here. We will be putting this on the website so that it's easier to find. It is on there if you click on the support page, but we will be making it a little bit more in your face so you won't miss it. But we do have an online tutorial. It's very similar to the webinar. It's just not live, but you can go through different sections and kind of go through whatever you need more help on. If you need a refresher on any of these, I would definitely recommend looking at this. But I think that's it. So thank you guys for attending. Um, it was fun as always. If I didn't answer your question, I will follow up with you and make sure to check out the Roth conversion webinar next week. We expect it to be a pretty crowded webinar, so we'll try and answer as many questions as we can, but we will be going through, who might be a good candidate, how to run the Roth conversions, and more. So that will be um, fun. So I hope everyone has a great rest of their week, and thank you again for attending. Have a great day.